It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
Hey, welcome back to the Real Estate Breakfast for our non-stop marathon, all the way around our 2025 year of real estate, breaking down for you the Australian property market. Never seems to be a dull moment, always plenty going on. And thank you for the many emails which we get each week. A lot of them just letting us know where you are listening in the world to us from. Good morning to you, Dean, in Los Angeles. You wrote in and said that after 10 years, you're going to be moving back to your hometown in Perth. You work in the oil industry in the US. I've got to say, man, oh man, has Perth changed in the last 10 years? And you're going to notice that for sure. And you asked also if there was any real estate company that we could recommend for you to transact with here in Perth. Now, it's an interesting question. The reason being is that we have been asked that many times before, but because we're not a real estate company, we have avoided it. That is until now. Because there are so many expats deciding to come home, they are listening to us but not sure what real estate company to connect with. And we have decided to put together a list of trusted people that we know so that we can supply all of those contacts for all of the major cities right around Australia. Also with our list, we have buyers agents who we can recommend to you. Now, you might be an investor offshore wanting to buy a property remotely, so we can help with that as well. And we have people, of course, in Australia asking the same question. So if you are in that position of requiring help, you can email us, myrealestatepodcast@gmail.com, and we will connect you with the right people. Well, a Saturday morning has rocked into town. It's another weekend. It is May the 24th as we say good morning to Anthony Landau, the Managing Director of Equilibria Finance.
Good morning, Craig. Great to be here, mate. And just on that, of course, we are more than happy to help anyone looking for assistance with their mortgages in Sydney. We're at the back end of a wild and woolly week of weather on the East Coast as well, but great to be here.
Yes, if anybody is looking for a mortgage broker in Sydney, we will be passing your details on there, Anthony. After an extended period of high cash rates placing pressure on borrowers, we have finally seen some relief this week. The cash rate dropping from 4.35% to 3.85%. But what does this shift actually mean for mortgage holders, new buyers, and of course the broader housing market? Perhaps first off, Anthony, can you give us a little bit of a snapshot of how the interest rates have moved recently and where they might be headed?
Yeah, thanks, Craig. All the talk this week's been about interest rates. It was back in November 2020 that interest rates hit the low of 10 basis points. They remained there until April 2022, then subsequently increased rapidly through that period of climbing house prices as well. We finally got our first cash rate relief back in February 25. And of course, this week, the cash rate was brought down to 3.85% from that high a couple of months ago of 4.35%. I think we've got another one or two rate cuts in us this calendar year to bring us down to under 3.5%, maybe in the mid to low threes with the cash rate before the end of the calendar year.
Yes, because I was talking with Nicola Powell from Domain a few days ago.
Our expectations, I think that we are going to see more rate cuts coming through. I think we're predicting one to occur in August, another one to occur in November. So I think this is obviously good news for mortgage holders, good news for those who want to purchase a property.
Yeah, that's pretty consistent with my view, I guess, 2 rate cuts. I think August does make sense and then one later in the year. The markets have factored in a little bit more. Some of the banks are saying a bit more, but I'm comfortable thinking 2 feels about right for where the economy's at and what's on the radar.
Now, I know that you like to sort of try and almost get inside the governor's head and work out what she is doing at the RBA. So I'm going to ask you this question. What downside risks is the RBA governor watching closely for right now?
Yeah, well, as you know, in my spare time, I like to read the RBA governor's meeting notes. So there we go. But yeah, look, interpreting those notes, I think what we've seen is a shift in her language. In the past sort of 12 months, a lot of it's been around the domestic economy, creating a lot of those inflationary risks. But our equity markets have settled down, the economy's settling down, consumer confidence is quite strong still. So her language has shifted to the downside risk very much now being around the global economy. What's going to happen with these tariffs? What's the impact going to be on the dollar? Are we going to get an economic slowdown? The governor's language has shifted from the domestic economy driving inflation to some of the downside risk around the global economy on our economy as a whole. And she's taking a cautionary approach around that rather than the domestic economy. And she's seeing that as the downside risk going forward into the next 6 to 12 months.
Yes, Michelle Bullock, it would be fair to say, and I don't know what your thoughts are with regard to this, but she came in as the governor at a pretty testy time. You know, it wasn't an easy takeover, and I think she's probably handled and equipped herself, particularly in these conferences, pretty well. She tends to have a little bit of a sense of humour, which I think you've got to have.
Yeah, look, I think she's communicating well. I think we are seeing a bit of a shift in the RBA, and they're going to a more reactionary in response to the data type approach as distinct from maybe foreseeing and setting monetary policy. I'm sort of seeing that little bit of a shift. They're waiting for the inflationary data. They're waiting for what's been happening and making decisions around that, whereas in the past maybe they've been a little bit more visionary around where their monetary policy settings might sit. There's a lot more political pressure now, a lot more pressure coming from the media, but she's communicating well. It's really, really important we maintain that independence of the RBA, though.
Well, looks like Michelle Bullock got a double thumbs up this morning, and we will come back and talk more about the rate cut after this.
Every morning from 6 a.m, we bring you the latest real estate news with diverse perspectives from leading industry experts. We deliver the most property podcasts across Australia every week.
You're pretty hot on sort of being committed to mentoring talent there at Barry Plant. So important, you know, to give a new person coming through all of the skills, the tools, the right sort of messaging and advice to set them up, to give them some sort of a chance, a realistic chance to last a little bit longer beyond that 12-month threshold where so many of them are dropping out.
Again, the pivot point for that cultural piece is the director in office. I absolutely have adored building a high-performing team here at our head office, and we have a great team in the corporate environment, and we have a great group of directors. So our focus, particularly this year, is on leadership. How do we all elevate, myself included? I don't believe that good culture is separate to high performance. I think that if you're performing well as a team, that is job satisfaction. So I don't think, I think culture is all about high performance as well, creating job satisfaction, helping people reach limits that perhaps they never believed that they could. That's the real joy. And of course, that's where you get great outcomes as well, because if my people feel safe, if our directors' people feel safe, and they're then going to show up their very best for the end customer.
Yes, these lofty goals where people go down the rabbit hole, and we've talked about this before, they go into real estate with an unrealistic expectation. And I guess you, as the head of an organisation, you've got to kind of put those parameters in place where it's like, yes, you can achieve that, but this is the sort of track that you've got to take in order to do that.
Well, and I think too, that's part of where the industry may have gone wrong is we're holding up these enormous commission numbers and celebrating that. That's actually not the way our group operates. The end result of all of the hard work is obviously the payoff. But if that's your motivation, you won't actually be using that moral compass that we talked about. You need to act with purpose and, providing that framework so that people can act with purpose within our business and act according to the Barry Plant values. And again, outcomes assured, we all like to make a good living. That's fine. But if that's your motivation, your chances of actually getting there and building a sustainable business are wrong.
From the emotion of property The economic inflation, managing your expectations, lack of stock, price growth, construction appetite, days on the market. Stay informed with us and know your property.
And it is a Real Estate Saturday. Hope you've got a great weekend planned. We are talking about these rate cuts and how they're affecting current mortgage holders. I think, Anthony, we should take a look at the lenders and what they're currently doing in terms of passing on the savings to the punters.
Yeah, good news is most of the lenders have passed the rate cuts on. They did that almost immediately. There are some lenders, smaller lenders, some of the lenders who might have been running some lower rates over the last month or so that haven't cut their rates. So keep an eye out on that. They tend to be the smaller banks, community banks, building societies. Take a look at them. Ask them what they're doing, but most of the providers have passed those rate cuts on pretty much straight away. Some of it doesn't come into effect for a couple of weeks after their announcement. Ask your mortgage broker, talk to your bank about that, but most of them have passed it on, except some of those smaller ones, as I said.
And of course, Anthony will always tell you to shop around for the best possible rate. And for new buyers, let's have a look at borrowing capacity and also the confidence. Two big things when people are looking to borrow.
They are, and just to touch on that shopping around, a 25 basis point drop on a $500,000 loan is $80 a month. So if we get 2, 3 or 4 of them, it's not insignificant. So yeah, keep an eye on what your provider's doing. In terms of new buyers, this is interesting because we're seeing some government policy that potentially is going to stimulate demand. Rates coming down tends to increase borrowers' capacity. What I mean by that is they can essentially borrow more. 25 basis point rate cut might mean they can borrow, depending on circumstance, another $20,000. You get 2 of them, might be $40,000. You get 3 of them, you're starting to borrow an extra $50,000, $60,000, which gives you more money essentially to go to market with. The other thing it does is it impacts sentiment. It gives borrowers confidence around what they're looking at doing and where interest rates are trending and the way they're going. So for borrowers looking to get in the market, that's good news. They can essentially borrow more. Their repayments are coming down. What it does do, though, is potentially stimulate demand, which can either hold prices where they are or increase prices. It's a tricky path to navigate because some of the government policy as well is around helping first home buyers get into the market. There's a couple of factors that could see demand for housing go up, and in some pockets it might mean we start seeing increased demand, increased prices in concert with increased borrowing capacity in some of those government initiatives.
All right, well, we've always got something to talk about when it comes to rate cuts. 2 more, I think you are right, along with Nicola for 2025. Enjoy your weekend, get the surfboard out, catch you back soon.
Thanks very much, Craig, and have a great week, everyone.
Explore new property destinations where you could live with exclusive interviews covering real estate news and market insights.
I think certainly here in Brisbane, where we've got a market that continues to be undersupplied with very low listing volumes compared to our historical average.
Yeah, I've seen these headlines. Buyers are back to borrowing big. I get a little bit nervous when I see some of these headlines because with interest rates dropping, many potential home buyers are pushing to borrow the maximum they're allowed. This renewed confidence, as you're talking about, is prompting people to stretch themselves financially. It pays to just think about these things.
It certainly does, and I think that it's important to also highlight the fact that borrowers are being assessed at a much higher capacity than their true affordability, and whilst they are able to borrow more money when interest rates fall, and whilst we are seeing many buyers stretch to their capacity, even if rates turn around and start to increase, that there's a buffer built into the borrowings that people are making.
We connect you to the best real estate information across Australia. The Real Estate Podcast.